So welcome to Coffee Cafe. Okay, finally we made it to our class project. So since this is Coffee Cafe and we're going to start from the very beginning, this is what you'll be needing for the Excel files. You will be needing your general journal, your general ledger, and your subsidiary ledger. Now let's go ahead and start with the general journal. Okay? So the general journal, right? This will have a bunch of worksheets that are going to consist of your, there's a calendar in here, okay, for the June calendar. So you can be aware when the store opened, okay, and what dates that are important. So Fridays are very important because we do our trial balance there. And we get paid on Fridays. Okay, so payroll periods, okay? And we're going to start our business as of the 3rd, okay? We have our chart of accounts. Your chart of accounts is going to be your most important tool that you will need for this entire journalizing process, because your chart of accounts is your go-to location to look up all the accounts that exist in your journal. Okay? That means when we do journalize, you can't be making up things, right? You should take a look and use transaction analysis, right? Because transaction analysis tells you that you must use your chart of accounts to see if an account exists and then properly journalize it. So right in front of you is going to be a list of every single account that you will need for this, for this project. So there's nothing that you need to add, nothing that you need to not use or anything like that, but there's everything that you need here and more. Okay, so we might not be able to use all of them, but they are already there for you and ready to go. Okay. So then we have the general journal, right? All 25 pages of the general journal are here. So again, making sure that when we do go over this, it's very important that we journalize everything chronologically, so in order of the events, okay? And this is where we're going to practice properly journalizing manually, right? Where we have a debit, credit, and we have a description for every single transaction, okay? Next section we have here is going to be the check register. Very important to always have so that when we do write out our first check, we are making some kind of paper trail to have proof that we did write a transaction, okay? We also have our deposit slips or deposits right here where we keep track of our money flowing into the company as well. And then, of course, last but not least, we have purchase orders. Now, as a business, right, since I'm teaching you from square one all the way to everything that's up to today, it is wise that we use a purchase order to keep track of what we order, whether it's inventory, whether it's items, whatever it is, right? We're using the purchase orders for the purpose of everything that we have. So we make sure that when we do purchase something, we receive it on our end as well. Okay, so I'm going to teach you how to use all of them. The second thing we have here is going to be your general ledger. So your general ledger is what we're going to be looking at every single transaction, is that we're going to start using the general ledger. Now, what does the general ledger have? The general ledger right here is every single account that exists in this class project. So all the accounts that exist on your chart of accounts, you have all of it in one entire folder or one entire spreadsheet, okay? And they are separated based on the account type. So here's all your assets, okay? Now, this, once again, is very similar to the journal, but the only difference is you have a normal balance at the end of each account. So that means every time we enter in a journal, we should know how much money we have in each account at any single given time. Okay? So again, it's separated based on account. And what I'm going to have you guys do is when we journal, we're going to go straight to the ledger. Okay? Journal, ledger, journal, ledger. Okay? So we have an updated account balance at all times. Okay? Especially the checking account. Okay? And then last but not least is going to be the subsidiary ledger. Subsidiary ledger has 3 certain people that are involved in your company. You have your customers, obviously, right? People who provide you money. So that's going to be accounts receivable. Or sorry, people who owe you money. So accounts receivable. And then here is going to be a list of all of your vendors, okay? And this is going to be your accounts payable, okay? And of course, we have our employees, okay? So here's a little table for employees. And of course, on this one, I also attached the payroll table, tax table for 2020, since this is being taken place in 2020. So we're going to take a look at using payroll when we make payments to them. And of course, we also have an independent contractor worker. Okay, so that is that. Okay, so that's just the first 3 worksheets that I'm exposing you for today. Next week, I'm going to be adding another worksheet, which is going to be the inventory worksheet, which you guys are pretty familiar with. And then from there, I will introduce you the financial forms, which at the end of every week/scenario, we're going to be completing a trial balance. Okay? So for now, we don't need that. We just need these 3 Excel files, and of course Word. I've already listed out what you need. Okay? And of course, if you choose to, you can. It's up to you if you prefer it. Have a copy of the Coffee Cafe scenarios. Okay, these will always be listed as the scenario for week 1. Now, do you need to print it out? No, you don't have to print this out just because this is just basically your guide to what the situation happened. What you do need to have for sure is your journal, your ledger, your subsidiary ledger open, but you can either have this on the side. Now, I'm going to have it on my screen so we can always take a look and be able to go through it. So you don't necessarily have to have it unless you prefer to have a hard copy in your hands and go through the scenarios one at a time. Okay? Excuse me. So let's go ahead and get started. So once again, welcome to Coffee Cafe. Okay, introduction to Coffee Cafe. Mr. Bob Mason, okay? He's your friend and he wants to start a small local coffee shop in his neighborhood. Okay? Here, right? And of course, he gets advice on how to start the new business, and he also does his research in the area to make sure which places are going to be the best place to open up a coffee shop. Okay? And of course, he asked you to intern for him to help properly keep his books. Okay, so that means this is our task. Of course we're his friend, so he asked us to help him out on the side. Okay, to keep track of his books, meaning keep track of his income, expenses, etc., etc. Okay, keep his books. Okay, of course, he also has $30,000 to invest into this company. Okay, all right, so we're gonna go ahead and start by setting up your chart of accounts. Okay, which again, I've already done that. Set up your ledger accounts, which we've already done that. Okay, right? I have it already pre-made for you, so we already have that set up already. Okay, so then now we need to go ahead and see what happens next or first. Okay, so on Monday, okay, May 31st, okay, Bob's friend from the bank, okay, tells him about a small business that went bankrupt, okay? It's a small coffee shop, that business that went bankrupt in his area, and he says, hey, take advantage and check this coffee shop out and see if it's something that you want, and, you know, it's all right now, it's currently short selling, okay? So, of course, he decides to go check it out, and he buys it. Okay, so here, right? The bankrupt business had a total of assets, fair market value of assets, that to be existing, fair market. Okay, not book value, fair market. That means he purchased this entire business for a total of $8,000. Right? He bought $4,000 worth of furniture. He bought a coffee brewer, okay? That's worth $1,900. He bought the business name, okay? Since we paid more for what it was, okay? We gained $2,100 worth of goodwill, okay? So that's the business name. And again, so that's what the shop was left with. It gave us a total of $8,000 with all of its assets. So, okay, what should we do here? Okay, so let's go ahead and review chapter 3 here, where we take a look at transaction analysis. Okay. Do we need to journalize this transaction? Okay. A transaction has occurred, correct?
Yes.
Okay.
Teacher,
Yes.
what about the capital, the 30,000 before this transaction?
Well, that's just money that we have in our pockets. That's the 30,000 that we have to invest into the company.
You mean it is capital?
Yes, it's okay. Yes, in general, yes, it's capital.
Why we don't put in bank or cash, debit and capital credit? This is the opening
Well,
of the business.
okay, all right. You're treading in the right way. Why don't we do that? Why? Do we have a bank account?
We don't have.
We don't have a bank account.
Yes.
And what rule governs this?
Means cash.
Well, what rule states that you need to have a bank account?
License.
There's a rule. There's a rule according to GAAP. What's the most important thing that you should do as a What's the most important thing that you should? Yes. Okay, so you say business license. What else? Okay. So, the most proper way to properly journalize your books is you need a separate bank account, right? Because right now that $30,000 is in his personal bank account. Can you or should you mix your personal bank account with a business transaction?
No.
Yes, due to the business and economic entity assumption, you should not ever use your personal bank account to do a business transaction. Okay? So in this case, right, that $30,000 is in Bob's bank right now. So can we record that $30,000?
No.
No, good. So
And then
if that's the case, can I journalize what I bought?
No.
No. Because I don't have a separate business bank account. Second thing, too, is I haven't even applied for a business license yet. I don't even exist as a business. So, if you're not identified as a business, can you open a business bank account?
No.
No. So, let's go ahead and take a look. So, in this case, especially when it comes to buying a business, right, you have to go through escrow. It takes a while. So, paperwork, it's still in process. So, all you did was just buy a bunch of assets. Okay? So in this case, no, we cannot record this transaction because we don't have the necessities or we don't even have a bank account and we don't have a business license. We are not existing as a business right now. So in this case, we bought this using Bob's personal money. Okay? We bought the business using Bob's personal cash. So in this case, no transaction is necessary. Okay? However, because this is a business transaction, you do want to keep this in mind because when we do actually open a business bank account, we need to backtrack and enter in everything that was a business transaction. So right now, our main goal is we need to apply for a business license and we need to also open up a bank account. Okay? So let's take a look at the next day. So then on June 3rd, right, same day, or I guess Monday, we applied for a DBA, which is a name, right? We changed it to a fictitious name to which cost us money. So whatever the DBA, which is doing business as, okay? So right now, it currently has another name, right? Because we bought out another coffee shop. We must legally change its name because since we bought a business name, right? When we have the goodwill, what we're doing is we're carrying the business name. So we must find some kind of way to change it. So in this case, we had to pay money to the court to change the name to Coffee Cafe. Okay? So that cost us $25. Okay? In this case, can we journalize this?
Not yet.
Not yet. Okay? So then Tuesday rolls around. Okay? And of course, we actually apply for the Nevada State Business License. And we also had to apply for the city, right? Because that's the part of doing business, right? You're gonna apply for the state, so then you could go ahead and pay for state taxes. But you also have to apply for the city that you're doing business in because that is where the county is going to be responsible for collecting the taxes that are necessary to do that. But also, you need to know what the rules and regulations are for doing business in that particular city. You can't just walk in and open a business and say, hey, I'm opening a business here. No, you have to look at the demographics. You have to look at the culture. You have to look at the rules, especially when you're doing business in a particular city. Okay. Here, so we are applying for a business license for both the state and the county. And that cost us $250 for the state and $100 for the city. Okay, so again, we submitted all this information, right? Business license in application. Okay, so here we are, business type. We establish ourselves as a sole proprietor. Okay, date that we applied was June 4th, and the name of the company is called Coffee Cafe. And then, of course, the owner is going to be Bob Mason. Okay, so that means Bob Mason and Coffee Cafe are one. Here's the address. So we're doing it in Las Vegas, okay, Nevada, okay. And, of course, that's Bob's phone number, okay, and zip code, all right, and Bob's email address, okay. So we have everything here ready to go. Okay, so that's what we had to do. We had to pay, we had to apply for the license and then pay money to apply. Okay, so once again, can we journalize this transaction? No, not yet, because we spent the money, but we don't have a bank account yet. So then finally, that very same day, we decided to go to the bank and open up a business checking account, okay, under the name Coffee Cafe. We applied for the business license. Now we're waiting for it to get approved and sent us our license. And we decided to bank at Main Bank of Nevada, okay? So this is what we're going to do. We're going to deposit the remaining money that we have left from our, after all of our purchases that we made, okay? So if you remember, we purchased a whole entire business, which includes $4,000 worth of furniture. We purchased the coffee brewer, which is a fixed asset for $1,900. We bought a business name, which once again, because we paid for more of it, we end up accruing, or I guess obtaining, goodwill, okay? And of course, we had to pay some business license fees, permits, and we also changed the actual legal name of the company, which cost us a total of $375, okay? And of course, we have our original investment, which was a total of $30,000, okay? So let's go ahead and use our chart of accounts, because now we need to make sure that these accounts exist in our books before we can journalize, okay? So first things first is, do we have a checking account in our chart of accounts? Yes, we do. Account number 10100. Now, here's how the chart of accounts is organized, right? We organize it based by account type. So your assets are going to be your first 10,000. Your liabilities are going to be your 20,000. Equities 30,000. Your income is 40,000. Cost of goods sold is 50,000, and your expenses are 60,000. Okay. Those are the number bases, okay? However, you're going to notice that when we take a look at a chart of accounts, there are things that are capitalized and then other things that are not capitalized. Those is going to be, your main accounts are going to be in capital letters, and your sub accounts, right, are going to be in lowercase letters, And anything that is a contra account will be indented. Okay? But this is Excel, so it's kind of hard to indent in Excel. Okay? But that's the main idea here. If you look at the chart of accounts, that is what I want you to take a look at. So here we do have a checking account. Checking is going to be 10,100. What else? I need to know if we have a furniture account. Do we have a furniture account? Yes, we do. 13,000. Next is going to be, do we actually have a coffee brewer account?
Yes.
Yes, we do, right? It's going to be under equipment. Okay? Boom. Coffee brewer 1510. Okay? And then do we have goodwill? Okay, yes, we do, right? 19,100.
100.
And then do we have anything that's remotely to license and a permit expense for our business license, city license, and then of course the court costs? Do we have anything that's remotely like that?
Is that a business expense?
Yeah. Okay. So business expense, that could be more or less the same. That could be categorized that way. But do we have a better account? That
60.
Yes, we have.
yes, right. License and permit expense is going to be more or less a better account to use. But if you didn't have this, then yes, business expense would be safe to assume so. Okay. So we have license and permit expense for 6,600. And do we have an owner's equity account?
Yeah.
Yes, we do. Now, how you journalize it is up to you. If you want to be consistent and put all your main accounts together in capital letters, but in this case, your journal doesn't really matter in regards to using capital letters, main accounts, or sub accounts, or anything like that, right? You're just going to identify what account you're going to be associating, the account number, and what the proper debit and credit is going to be. And that's it. However, when we do our trial balance, that also goes the same way as your trial balance. It doesn't really matter because you're just testing whether your total debits and your total credits match up. But again, when you do your financial statements or those kind of things, right? If you do your trial balance, you should use your methods to make sure that you know the difference between a main account and a sub account, because we will be doing towards the end, I will be asking you to journalize only the main accounts, or doing a trial balance using only main accounts, okay? Again, so main accounts is going to be, right, the overall umbrella. So if we take a look here, right, a great example of that would be under inventory, right? The products that we sell is going to be regular coffee, supreme coffee, and ceramic coffee mugs. These three is what makes up your total inventory for the main account. Again, when you journalize it, it's up to you if you want to be consistent, but no, I'm not going to require you to. However, your journal must 100% match the entire account name. No abbreviations for this one, unless for this case, I'll make that exception because you're learning how to journalize. And if you're writing all of this down, then that's fine. Just make sure that you have the proper, if you do use abbreviations, make sure you know what that account is and make sure you use your account numbers. But for this class, we're going to practice this together to properly journalize it in full, with full letters and et cetera, right? So let's go ahead and journalize this because we finally have a bank account. Okay? After all the money that we spent, we have a grand total of $21,625. Okay? So, date that we are on. What's the date? June 4th, okay? First thing that we're going to do, right? We're going to recognize our first account, which is our checking account. Let's see if I can make this a little bigger. Okay? We're going to recognize our checking account because that is the first thing that we are going to be putting into the bank is our checking account. Okay? So checking. Which was account number 10100. And we're going to journalize it for 21,625. Okay? Right? That's how much we had left after all of the money that we spent for the business. Right? That's the money that we have left. And we're going to deposit that all in our checking account. Okay? We acquired some furniture. Okay, right? When we bought the business, we had some furniture. Now, what kind of furniture? It doesn't matter because I'm going to sell this furniture because it's not going to be useful for me. Okay? Because, yes, it's old. It doesn't match our store. It's not what we're looking for, but it just came with the business. So we had to acquire it anyway. So in this case, it was $13,000 and it was worth $4,000. Okay. Then the next thing that we bought was a coffee brewer. Okay, which was $15,010. Okay, and it was for $1,900. Okay. We obtained the business name because we bought it short-sailed. Okay, and the business name had a carrying value of $2,100, which in this case Goodwill was $19,000. I'm gonna double check that one. Chart of accounts.
19,100.
19,100. Thank you. Okay. So back to your general journal, account number 19,100 for 2,100. Okay. We had a license and permit expense. Okay, which was for, well, in this case, let me see, license and permit expense was $6,600, which was a total of $375. How do I know? Well, I can list it down below because my state license cost me $250. My city license cost me $100. And of course, I also have to include the court fees of $25 that I had to pay in order to legally change the business name to what I want to make it to Coffee Cafe. Okay? So in this case, there you go. Now, this is me acquiring assets, right? We have to increase our cash flow. So that's why we're debiting our checking account for 21. We gained or bought furniture. Okay, so we increase our assets there. We bought a machine. Okay. And then we bought a business name, which once again is Goodwill is considered an intangible asset. And then last but not least, we had to spend money to buy a license for the business. So in this case, we debited with an expense, right? Now the last thing that we have to do is what was my original investment into this entire business? Okay? And that's what my end is going to be, is what was my original investment for this company, right? And when we talk about original investment, that automatically means that your opening balance in your equity account, right? This is what my company's worth because I took money and I put it in and I dedicated this amount into my company, okay? Which is account number 30,000. And this is my rule of thumb here. I am going to use Excel for the purpose of using Excel, which is I'm going to go ahead and tally up my totals here because what if I made a typo somewhere? I want to ensure that my total debits match my total credits, okay? And I should have a total equity worth $30,000. And that's correct, right? That was my original investment for the company. These are the transactions that I've already done for the company that totaled up to a total of $30,000. So think about it, right? Your total assets, right? We haven't dipped into liabilities yet, but my total assets equal the total value of my company. Okay. All right. So now that I was able to properly journalize that, now let's actually put an actual description. Okay. So in this case, you can either follow what I've example put down below, or you can come up with your own description. Just make sure that you recognize what this transaction is. And in this case, well, we opened our bank account, so that's a pretty obvious. But in this case, right, things that we need to make note is what is our business license and permit expense entail? Obviously, furniture, coffee brewer, and goodwill is pretty straightforward. Okay? So then you can go ahead and say, well, we had a court cost for $25. Okay? We had to pay for Nevada state, okay, Nevada license, so license for $250. And our city license was for $100. And of course, we purchased business for $8,000. Okay? And that pretty much tells me exactly what I need to know, right? This tells me what the details of this transaction was. And then, of course, if you want to, you could say dated back before then on purchase business on May 31st. Okay? Whatever you want to put in there. Any other extra details. So there you go. Now I finally properly journalized my transactions. Okay? Any questions so far?
Yes.
Go ahead.
Why you don't mention the checking account in the description?
It is when you, if you're putting money into a checking account, isn't it pretty obvious you're going to a bank? Where else what other financial institution would you ever use a checking account? Where else would you be in order to have a checking account? Do you need to mention that you're at the bank? You can if you want, if it's very specific to you. Yes, you can, but in this case, it's, to me, that's pretty straightforward. If you're increasing your checking account, right? You had to go to the bank in order to increase your checking account. There's no way else around it. You're not going to wire money into your checking account because you physically need to be at the bank in order to put $21,000. There's no way that you can not be at the bank and be able to put $21,000 in the bank account. So in this case, that is considered a safe assumption and a pretty obvious one. Okay? But if you want to, you can say, I opened my bank account, and if you'd like. And then you can go ahead and put in the rest of your stuff. That's completely fine. If you want to be that more detailed, you can do so. Okay. Any other questions in regards to journalizing?
No.
Okay? So, there are a few things that I want to show you as well, but right now let's go ahead and this is what I want you to do. Now that we finished journalizing, I want you to go ahead and update your ledger immediately, okay? So you have created a running balance at all times, okay? So we're going to go to our ledger, okay? So our general ledger, okay? Subsidiary ledgers with all your people. This one's dealing with accounts. So what I want you to do is in every single account that is listed on here, we are going to follow through. Now, this is my best rule of thumb, especially for those who are putting this in for the first time or journalizing for the first time or using the ledger for the first time. Best rule of thumb is do not skip around. Just because an account may have existed prior, like if you're doing it in exact account order, right? You do have possibilities that you could forget to put it in a ledger account and end up getting those discrepancies, okay? So my rule of thumb is for beginners, right? I want you to go in the exact order that you journalized your accounts for. So the first one is going to be checking, okay? So checking, like I've mentioned before, is an asset. The accounts are in the exact order as in your chart of accounts. So in this case, if 10-100, right, whichever method that you use to locate these accounts, whether you look at the account name or look at the account number, just find the table and plug it in. Now, if you use Excel, there are ways that you can look up the information. But in this case, I prefer to scroll just because there's actually not that many accounts in this scenario. There's no need to use a lookup tool if you can just simply just scroll and be able to find it. Okay? So the first one we have here is my checking account, right here, 10-100. And for this transaction, we had this occur on June 4th. And then this is where I'm going to make even more detailed notes about this transaction. Okay? So in this case, what I'm going to say here in my checking account is this is my opening beginning balance. Okay? Right? Opening beginning balance. This is what I start my checking account with. Okay? Now your post reference. This is where it's different from your actual journal. My post reference for my journal is going to be my account numbers, right? So I know exactly which accounts I'm using. However, when I'm on my ledger, this post reference is going to be where in the journal did I make this transaction. So then if I'm making a mistake somewhere in my ledger, I can take a look at my post reference and said, okay, well, this transaction happened on page 1. So then I can look on my journal to find that exact location, right, page 1, and be able to say, okay, that's what happened. So that's exactly what this post reference is going to be. It's going to be your general journal, page 1. Okay, because if you look on your general journal, right, you are currently on page 1. Okay, if you look at the top up here, we're on page 1. So there you go. I do JG1, GJ1, okay? And whatever you posted in your ledger account or your journal is going to be identical to your ledger. So in this case, I debited my account for 21,625. Okay? 21,625. Okay? You may need to reformat your cells in your ledger account just because I left it open air just in case there's a preference of how you want to style it. So in this case, my preference is I actually kind of like the accounting style nowadays. But if not, you can always use comma style, which shows you 2 decimal places. Okay? And then now we need to figure out what my normal balance is. If I started out with 0 and I debited my account for 21,625, therefore my checking account should show that I have $21,625. Okay? And this is where I'm going to show you from the next couple transactions here on out how we use the ledger to figure out how much money we have in the bank at all times. Okay? So that's our very first transaction right there. So now we move on to the next one. I have furniture. Okay? So furniture, let's see, we've got to locate it. It's 13,000. So that's my inventory, and it's literally right under your inventory. So here we are, furniture. Okay? It is 6.4 right now. And you can go ahead and say purchase furniture on May 31st, whatever you want to put in there. Since I don't care to make a note of what this actual furniture is because I'm not going to keep it, there's no need to make a description of what it is. You could just say, I purchased it on this day. Okay? Because in this case, right, we're backtracking, right? Right now I'm journalizing this as of June 4th, but I made this purchase of the furniture on May 31st. Okay? Post reference once again, general journal number 1. And I debited my account because I acquired the fixed asset, right? I acquired the furniture for a total of the $4,000. Okay? Once again, because that's what I started out with, that means my beginning balance in furniture is going to be for the $4,000. Okay? No, I want to make sure I format this to be in comma style. Okay? So there you go, $4,000. Okay. So then my next one is going to be coffee brewer. So my coffee brewer account is account number 1510. So I can just scroll down and locate my 1510. Here it is, 1520. There you go, 1510. Coffee brewer. Okay? Date is going to be June 4th. Now you could say this one is kind of straightforward. But I'm going to go ahead and make sure that I indicate that I made this purchase of the furniture. Purchased coffee brewer. And I'm going to make this my coffee brewer number 1. Okay? Because I could potentially have multiple coffee brewers. In this case, I'm going to have, this is my first coffee brewer that I acquired. Coffee brewer number 1. Okay? On May 31st. Okay? Now, post reference is general journal number 1. And because when we acquired it, we debited our account for $1,900. So therefore, my account balance in my coffee brewer is going to be for $1,900. Okay? So there you go. I'm going to reformat this. Now again, you can spend the time to format the whole entire spreadsheet so then when you do type these in, they are ready to go. That's fine. These spreadsheets are all for you guys, right? whether you want to choose to use it or whatever you want to do with it. Okay? Is there a question?
Yeah, how come I'm not finding the coffee brewer?
It is right under equipment, under assets. If you download the exact one, this is the exact copy. So it should be there. Okay. Are you using Excel or are you printing out this printouts?
Excel.
Excel. Okay, then it should be line for you, line number 447.
Oh, fine. Found it. Found
Okay.
it, sorry.
No worries. Okay. Okay, so that's what we did, right? We purchased our first coffee brewer, and that's the details I'm filling out my general ledger. So that means my account for coffee brewers is going to be for 1,900. Okay. Next account that we have here, right, is Goodwill. Okay. Goodwill was buying the business name. So I'm going to scroll down to find and locate my Goodwill. Since it's 1,900, it should be fairly at the bottom of my list of assets for my chart of accounts because it's an intangible asset, right? It's June 6th right now. But the details that I'm going to go ahead and say here is purchase business name. On May 31st. Okay? General Journal, page 1. And because we acquired an intangible asset, right? When we learned about goodwill back in chapter 11, right? Goodwill stems from buying a company over its worth, its value in assets. Okay? Total assets and net assets. So in this case, right, I gained value for buying the business name. And it gave me a value of 2,100. Okay? And of course, that means my beginning balance in my Goodwill account is going to be for 2,100. Okay. Is everyone good with me so far? So now going back down to the list, after Goodwill, we have license and permit expense. That's an expense account, okay? It's account number 6,600. So I'm going to go down to my tabs down here, and I'm going to locate and find my total operating expenses. So right here, expenses OP, which is operating, and I'm going to go ahead and locate my license and permit account. Now in this case, I put it in alphabetical order. So here it is, license and permit. Okay, account number 6,600. Okay, 4. Okay, and then what I'm going to put here is I had to pay court cost. $25. Court cost $25. Nevada license for $250, and city license for $100. Okay. Okay. And then of course post reference, right? We're still on general journal number 1, and because I had to spend this money in order to change the name, acquire the license to give me permission to do business in the state and the city, that racks me up to $375. Now, what you can do too is just to ensure that the math is correct. You can go ahead and do your math right in Excel, so then you don't make any typo errors here. Now, of course, here's the problem, especially when you're going from your journal to your ledger. This is where a lot of human mistakes happen, because when we transfer things over, right, some of us can be staring at the number for too long that we end up to making a wrong number, or we fat finger the wrong number. So I could have accidentally, like earlier, I put 275 instead of 375. This is, once again, the reason why our accounting is mostly messed up is because of us. We are 95% of accounting errors, because we either fat finger, type in things incorrectly, or when we do the transferring process from journal to ledger, we just end up making those tiny minor mistakes. So it's very, 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 very imperative that you do double check your work and making sure that you do type everything in correctly, especially when you're bouncing from one account to another, to another, to another, okay? So in this case, right, there you go, I ensured that this right here is going to give me a total of $375, okay? All right, and we're going to format this real quick. Okay, all right. Last thing that we have on here is your equity account. So I'm going to go ahead and locate my little tab for equity. Here it is. Okay, equity at the very, very top. Okay. Make sure this is what you do correctly too, because here's my owner's equity. I'm going to see if I can expand this just a little bit. So this is my owner's equity account, and so owner's equity, right? This is what I'm going to make a note here, is this was my original investment, okay? Original investment. Now, here's what's very tragic about Excel is it's not going to help you predict. It's not going to really figure out whether you type something in right or wrong. So in this case, original investment. You type in, if you make a typo, that's obviously okay. You can always go back and fix it. Again, this is a program, right? We're typing in, so this is where a lot of typos can happen. But that doesn't mean it's the end of the world, okay? You just have to just recognize it, like earlier, and be able to just either fix it or just leave it, whatever you want to do, okay? This isn't a spelling class, so it doesn't even matter what, as long as you know what this means, okay? Again, so we have an original investment and post reference, once again, general journal number 1, and make sure this time my owner's equity is credited for $30,000. So this is where I need to make sure I don't make that mistake right here, and whatever you journalize in your journal, you're going to copy it identical into your ledger. So in this case, if my owner's equity is credited, I need to make sure that I do credit this account for $30,000, okay? So that's also another mistake that a lot of students do is, since they're going through this, they just find the box and just put in all the answers, okay? No, there's the boxes and things for a reason. I just need you to make sure that if you do recognize this, to make sure that you properly place it into the ledger in the exact appropriate boxes, okay? So in this case, right, so same thing when I was doing earlier, since I did everything in a debit, now this is my credit, so I also have to look at my normal balance because I don't have a debit balance. I now have a credit balance, okay? So therefore, I need to be on the right side, far right side, okay? And because that's my beginning balance, I now currently have a beginning balance of $30,000 credit. Okay, on the credit side. Okay. And once I've done that, and that was my last account, now I'm completely finished with my ledger account. Okay. Any questions?
No.
Okay. Now, there are many ways that you can do this. In this perspective, I find it the most easiest to just journalize and then go straight to your ledger, because that way you know what your account balance is at all times. Because there will be an occasion where we're going to be writing checks left and right, and it would be really bad if you find out that you wrote an NSF check when that could be preventable. Okay. Now, of course, that's just a given situation. Oftentimes, you can post to your ledger at the end of a certain week, at the end of the day. It doesn't matter, as long as whatever means that it has for you to be able to do it. For me, since I'm showing you how to do this, I would prefer you to keep very close track of the money, especially your checking account. Making sure that you have a running balance in your checking account at all times after a journal has happened. Not at the end of the day, at the end of each transaction. So that's what I'm going to be practicing with you guys, okay? So there we go. Now that we finished our journal, which is step 3, we finished our ledger, which is step 4. Now, since we didn't deal with really anybody, right? We didn't deal... is there something that we need to write in our main bank person? No, right? There's no transaction that we could really actually did with the bank except for deposit money into the bank. Was there a fee or anything like that? No, right? So the ledger is strictly only if you have things that, for example, right, you have things that you receive bills for, right, accounts payable. In this case, we just went to the bank and we just deposited all the money. Okay? So with that being said, that when we deposited the money, that should be the next thing that you should do, is that I want to make sure that when I do match my deposits to my bank statement, right, that I want to see that on June 4th, I made a deposit to my checking account for $21,625. Okay. Right, so here's the money I had, $21,625, and I went to the bank on June 4th, and I deposited the $21,625. Now, do you need to have dates of when you collected the money? You can. In this case, this is sufficient enough. But if you need necessary extra columns to make notes or whatever that you need to have, you're more than welcome to expand, extend, add, subtract, whatever you want to do. These Excel spreadsheets are for your learning, so if you benefit by having more information in there, go ahead and do so. In this case, I think this is sufficient enough for me to say that, well, this is the money I had, and I deposited it on the 6th, and that should show up on my bank account for the $21,625. Okay. All right. And as far as that transaction, that is actually it. There's nothing else that we need to necessarily do for this transaction. Okay. Any questions?
No.
All right. So let's go ahead and see what happened next. So here we applied for a line of credit from the Maine Bank of Nevada. Is this something we need to journalize?
I don't think so.
Okay, why do you not think so?
You don't have any money or nothing is an exchange.
Good, correct. All you did was simply apply. You didn't pay for something. This is basically requesting for a line of credit. Now, in this case, did you get approved?
We don't know yet.
We don't know yet. And we don't even know how much. If we did get approved, we do not know how much. So good. In this case, no. This transaction is not significant enough because there's no actual real money going in or out, right? There's no commitment. There's no actual payment. All you did was simply apply. Okay? All right, continuing on. So we end up selling the furniture for $2,000 cash. Okay? And of course, we have to request for a new account to record the loss. So in this case, what I want you to do is, because I haven't created that account yet, you can put it into miscellaneous expense. But what I'm going to do here is just because I already have the account, you can choose to. That's what I want to do. I think that I want to make the executive change now that I don't want you to put it in miscellaneous expense. I'd rather you utilize the account since I already created it. I want you to put this on loss on disposal of asset. Okay? Because in this case, right, our furniture right now, since we got rid of all of it, it has a holding value of my historical cost of $4,000. But because we resold our furniture, right, you are 100% going to take a loss on it because it's been used. You bought it off secondhand off of someone else, and you're trying to resell it for some kind of salvage value or some kind of money out of it, just to get something out of it. In this case, the scenario says that I sold it for $2,000, but I originally purchased it for $4,000. So therefore, that means I took a $2,000 loss. Now, is this $2,000 loss real money? Did you actually lose $2,000 in real life? No, of course you didn't really. Well, when you originally paid for it, yes, you did because you didn't get the money back for it. But in this case, my question was, did you actually pay $2,000 to get rid of your asset? No. So this is where the accrual basis comes into play, where we have theoretics coming around. We have invisible money. In this case, because we recorded in our books because that's what we purchased it for, right? We can't just write it off for $2,000 because then it shows in our books that we still have $2,000 left of furniture. Since we sold all of it, right, we have to recognize that, well, we sold it for $2,000 cash, but the remaining $2,000 is something that we incurred as an expense because we end up losing that $2,000 value. Okay, so with this being said, let's go ahead and take a look. Now, do I have a cash account? In my chart of accounts? No. So my assumption is I must have deposited the money into my checking account. Okay, so there we go. We have checking for 10-100. Now, do we have an account called loss on disposal of assets? Let's take a look at that.
Yeah.
Yes, we do. Good. Right. 60 sorry, 6,700. Okay? And of course, we got rid of our furniture. So in this case, how do you decrease your furniture? Right? How do you get rid of the furniture off your books? You would simply credit it. Okay? So in this case, we do have the furniture account, right, for 13,000. So let's go ahead and properly journalize this. So we are still on the 4th of June, okay? We sold the furniture for cash, which that means we placed the money into our checking account. How much did we place? $2,000, okay? Now, of course, because I'm recognizing my expense because I sold my furniture for the value that's less than what it's actually worth, I have to recognize my loss on disposal of asset, which is account number 6,700. Okay? And that's for $2,000. So in this case, when I credit my account, right, because I got rid of my furniture, I no longer have it anymore. I must indent because this is my indicator that I'm crediting my account for 13,000 for a total of, let me make sure I didn't make any typos here, for $4,000. Okay? And what I'm going to say here is I'm going to go ahead and make a note that I loss on sale of asset. Okay. Because this is pretty straightforward, right? If you're decreasing your furniture and you received money and you have the loss on disposal of asset, that's pretty clear that you sold the furniture. Or okay, so I put furniture, I put asset. Okay. Loss on sale of furniture. Okay. Okay. So then, my next step is now that I finished my journal, right? I got my proper accounts on there. I put a proper description. I put all my account numbers and I have my debits equaling my credits. Now I'm going to go straight to my ledger account because now I need to know how much is each of my accounts. I need to know what my account balances in each account is. So let's go ahead and go to, first thing I have is my checking account. Okay? So in this case, checking, right? I increased my value because I deposited $2,000. That means my cash value has increased. So let's go ahead and take a look at this. So it is June 4th, and what I'm going to say here's my note was sale on furniture. Okay? I sold my furniture. Okay? And we're still on general journal number 1. And because I increased my cash flow by $2,000, right? That's the amount of money I earned from this sale of assets, of furniture, right? I'm getting rid of it. I increased my checking account by $2,000. So therefore, when you are using Excel, okay, this formula is going to be your best friend because this is so then when you do your accounting, you don't have to manually calculate this and punch it in the calculator. Excel should do it for you automatically. So here is the formula, okay? It's going to be equal, right? You're going to take the previous number above it, so the 21,625, okay? You're going to add any debits of that current line. So in this case, if I add $2,000, right, it's going to increase my account. But because I want to make this a dual account, I'm going to go ahead and also enter in another section saying, well, if it was a credit, I'm going to subtract this row right here, or this cell right here for the credit. Okay? So then that's going to bring me to saying that, okay, Excel's going to do this. It's going to take your previous balance, add your debits, and subtract any credits. So in this case, I'm going to add $2,000, but subtract 0. So then that's going to give me 23,625. Now, what does this formula hold? So if I can carry this down to the next one, right? Let's say the next example, right? I spent some money. If I were to spend money and say I spent $1,500, right? It's going to automatically recalculate that formula for me because now it's taking my previous balance of 23,625. It's going to add 0, but it's going to also subtract whatever column I have in this one. In this case, I put 1,500. It subtracted it and recalculated for me. So this right here is what's going to help you save some time and get you a little more accurate with your numbers, because now that I created a formula, right, this formula can be dragged all the way down to the bottom of your page, okay, so that you have a running balance and you know at all times. Because right now I have 0 in all of my accounts in these columns right here, but if I were to add a debit, it will automatically update this and add it. If I have a credit, it will automatically update this and subtract it. Okay, so that's how we use the Excel section. Now, if you're doing this manually on a calculator, it's pretty straightforward, right? If I have a current balance of 21,625 and I know that debits is going to increase my checking account, right? Or if you're thinking blatant terms, right? I just added $2,000 to my checking account. So therefore, I should now have whatever 21 plus 2,000 is, which gives me a total of 23,625. Okay? Good so far?
Yep.
Okay. There you go. Now the next account that's on my list is going to be my loss on disposal of asset. Because it's a debit account, it comes first before my furniture, which is also an asset account. Now, this is what I recommend you to do. Do not skip it over just because I'm currently on my assets right now. I can do it, right? When we come to a conclusion where we have a journal that has multiple accounts, like our very first one, right? If you skip around, you have the most likely chance to forget to come back to it and proceed to the next one. Okay? It's a common mistake, right? You think, or in this case, sometimes if you skip over it, you think that you did it, but you really didn't do it. Okay? So in this case, that's why it's very imperative for beginners who are learning how to properly journalize and properly post to the ledger. I recommend you to go in the exact order that you see it. So right now, loss on disposal of asset is going to be next. And that is an operating expense. Okay? Right here, it's actually right below my license and permit expense. So I can go ahead and journalize that there. Okay? 6.4, loss on sale of furniture. Okay? Now, for your notes, they do not need to match my notes, okay? This is, again, your spreadsheets, okay? I'm doing this so then I can show you what or how to fill out this table. In this case, right, if I'm going to be filling out my loss on disposal of asset, I should give details of which asset I sold. So in this case, well, I took a loss because I sold my furniture. And it happened on June 4th. So that's my details here. You can leave this entire section blank if you'd like because, again, it is up to you on what you want to fill this out. These are your worksheets and this is your learning. Okay? So again, if you don't want to put anything in there, you don't have to. If you could put a loss, that's fine. As long as you know what this means to you. Okay? Again, post reference is general journal number 1. And since we took a loss, which is an expense, right? We end up debiting our account for $2,000. Okay? Okay. Right? So now that we figured that out, right? So I have a debit balance in my loss for disposal of assets, which gave me a debit balance of $2,000. So then, last thing that's on my journal is I end up getting rid of my furniture. So I'm going to go back to my assets. I'm going to go ahead and locate my furniture. Okay? And I'm going to go ahead and take that furniture off. Okay? So in this case, here's my furniture account. I'm going to go ahead and put the date. And in this case, right, I end up selling or sold furniture. Okay? Do I need to be specific about it? Do I need to write for $2,000? No, because your book should be able to distinguish that, or your journal should be able to distinguish that, right? You can say that you sold your furniture for a loss, but that's not, you're not going to record it at a loss. You're just going to record it as if you just got rid of your furniture. So in this case, I'm going to just type in, I just sold my furniture. And my reference point is this transaction happened on the general journal number 1. Okay? So if I were to go ahead and click this, right, or not click it, but look at this saying that this happened on page 1, right? If I know that I sold my furniture, this will show me right here that I did sell my furniture, but I end up taking a loss on it. Okay? So because in this case, right, I end up crediting my account for $4,000, right? Let's go ahead and do my formula once again. I'm going to take my previous balance of $4,000. I'm going to add my debit of $0, but I'm going to also subtract my credit for $4,000, which should give me, right, when I press enter, an ending balance of $0 in my furniture account. So this shows me that I had furniture, and then now I don't have any furniture because I sold it. I got rid of it. I acquired it, and then I got rid of it off my books. All right. And then, of course, I reached the end of my journal here, or my ledger, because that's the last account that I had. And now, I didn't deal with anybody in this case. I don't care who I sold this to. So in this case, this doesn't affect anybody that's in my business, right? My customers, my vendors, my employees. I don't have employees right now. I don't have customers. And for vendors, I haven't talked about them yet. Okay? So in this case, I don't care who I sold my furniture to, so it doesn't affect my subsidiary ledger, so I am done with this transaction. Okay? So that means I can proceed to the next one. Okay? Any questions? Okay. So I'm going to stop here because right now is exactly 9:58, so I'm going to round to 10 o'clock, and we're going to go on our break. Okay? Now, usually for this kind of class, since we have